Good evening, friends. Our waiting time is over. Within 2 minutes, sir will join us. Then after we can start our session. So you can wait 2 minutes more. Then after we can start our session.
हेलो तुषार सर वेटिंग रूम में है हेलो
Okay, okay.
Good evening, sir.
Hi, Sai Ruthvi. Good evening, and I'm really sorry I got late. Anyways,
No issues, sir.
so can we just start, or is there
Yeah,
any?
yes,
All
yes,
right,
sir.
folks. So
Vidatri?
Good evening, sir.
yeah, good evening, guys. Good evening. So first of all, a quick question: like, are you all from IIT Madras, right?
Yes, sir.
Yes. And what course are you pursuing?
So we are doing data science, BS in data
Data
science.
science. Okay. Wonderful. Yeah, wonderful. Chalo, thank you so much for making me a co-host, and thank you so much for inviting me. And I really apologize for being late. Anyways, so let's just get with the course today. So we will be studying a few things about equity research and valuation, right? So as we have only a few, like I'll say only 1 hour, right? Only 1 hour 15 minutes, or maybe max to max 90 minutes. So we will not be going too much detail into the valuation aspect. So let me just share my screen, right? Just a second. Let me just. All right, folks. So I'll just share my screen. Share window. Wait a second. Wait, I'll just share the entire screen instead of just a window. Yep. So just a quick question, folks. Do you have any prior experience about equity research valuation or financial statement analysis? Just one quick question before we begin.
No, sir.
All right, folks. Wonderful, wonderful. So today we'll be looking at the financial statement forecasting and how to actually forecast the statements. All right, a few people have none, like zero experience. So let me just get you a brief how to get the data that you want, right? And how to begin the equity research process if you are an absolute new. Now, a quick question, because this entire session is going to be interactive session instead of just me doing the lecture by looking at the PPT. So folks, please tell me, Abhi, in the last few days, something has happened in the market, right? One of the indexes has touched a new high. So can you please tell me which index has touched what number, right? Abhi recently, an index, broader market index has touched.
Sensex touched a new high.
Right. How much?
I think 22,000 something.
Oh no, Sensex, Nifty Bank, and Nifty, all the three indexes touched their new highs.
Right. Sensex has touched around
Sensex
75,000, right?
Oh
75.
And
yeah,
Nifty
sorry,
50.
75,000. Yeah.
75,000, right? So Sensex has touched 75,000 and Sensex P right now is 25.6, which is slightly overvalued if I look at the historical medians, right? If I look at the PE ratio, the median PE ratio of Sensex is 24.2, right? So what this exactly means is the market, the market is currently ready to pay 25 rupees for 1 rupee earning of Sensex, right? So I'll not be going to the each and every aspect of market, stock market, equity research, but I'm going to give you a brief outline how to conduct the equity research process and how to value the a business, right? Not exactly how to value a business, but how to forecast the financial statement. As you can see, I have the PPT that I teach in my valuation courses on YouTube as well, right? So first things first, I'm just a student of Professor Aswat Damodar. I do not call myself an authority on valuation or equity research or investing, whatever, right? But I'm just a student, and I'm as much curious about valuation, stock market as you guys are, right? So let me just begin with the forecasting part, right? As you all know, some of you said that, Sir Piyush, we are well versed with the equity research, and some of you are not. So can anybody tell me why do we forecast financial statements? Can anybody give me a good understanding why do we forecast the statements so that we can have a good discussion? Can anybody help me understand that? Why forecasting? Why do we forecast P&L account? Why do we forecast balance sheet? And how do we calculate the cash flow? Just a bit, just a minute idea if I can get from you guys. Sorry?
To get an idea where to invest, or
Yes,
which
to
will
get an
give
idea.
us a good return.
Yes, absolutely right. Absolutely right. So the how to get the idea, right? So the question is, why do we forecast? The answer is that in an uncertain world, we need some form of certainty, right? Now, to create certainty, right, in financial statements, right? And we have a company here known as Varun Beverages. Now, I'm going to show you how to forecast the profit and loss account of the Varun Beverages, and mainly we are going to talk about the forecasting of the revenues and not the entire P&L account, right? So, folks, fasten your seatbelt if you have ever never done this before, you are going to love the sessions. So let me just give a brief understanding of the Varun beverages, and then we can look at the profit and loss account of the Varun beverages. Right. Once again, a standard disclaimer: nothing should be construed as an investment advice in this session. Right. I'll be taking the example of Varun beverages, and I'll be taking a few more example of companies like ITC, companies like Vari Renewables, and companies like Oli Technologies. Right, which is a micro cap stock. All right. So nothing should be construed as an investment advice. So let's just focus on the Varun beverages. Now, why are we talking about Varun beverages, right? Can anybody please tell me what does Varun beverages do? Even though the answer is on the screen, please give me a rough idea. What's the business model of the company? Please help me, folks.
Yeah, this manufacturing of beverages.
Yeah, beverages, but which beverages? Can we just look at over here?
Like
Varun beverage.
Pepsi.
Yeah, absolutely right. The company is a franchisee of PepsiCo, right? PepsiCo is the manufacturer and the owner of the beverages known as Pepsi. You have 7 Up, you have Mirinda, you have Orange, right? Mirinda Orange, Mountain Dew, Tropicana juices, and many more, right? And also, Varun Beverages is a part of the RG Group, which is the largest franchisee of Pizza Hut, KFC, Cream Bell, and Costa Coffee in India. So, folks, whenever you drink a glass of your Pepsi, your Mirinda, your Mountain Dew, your 7 Up, understand this that you are buying the products of Varun Beverages. And if you are dine in Pizza Hut, KFC, Cream Bell, and Costa Coffee, understand that Varun Beverage is the force behind the this entire chain, right? So let's just quickly take a glance at the investor PPT. So this is the first step in equity research. Always understand what the company does, right? How do they make money? What makes it special? What are the products and services of the company, right? Second step, go to the document section of Screener, and I'm assuming that you know what Screener is. You know what what Tijori Finance is, right? These are some few tools that I use on a daily basis, which will help you a lot in equity research, right? So go to the con call section and look at the investor presentation, right? Every publicly listed company, if it is not a micro cap company, releases a quarterly presentation to their investor, right? Equity shareholder, it is a must for every company, right? So let's quickly take a snapshot of the company. It is a key player in beverage industry. Once again, not so useful, spanning across 6 countries, right? 6 कंट्री में इनके ऑपरेशन है, राइट? सो सबसे पहले मुझको ये आइडिया चाहिए कि कंपनी कहाँ कहाँ बिजनेस कर रही है, वेयर द कंपनी इज एक्चुअली कंडक्टिंग इट्स बिजनेस एक्टिविटीज, एंड 83% ऑफ द रेवेन्यूज कम्स फ्रॉम योर India, from 3 countries, that is India, Sri Lanka, and Nepal. So what I am assuming is the company is dominantly established in the southeastern part of the Asian subcontinent, and 17% comes from the African continent, right? Morocco, Zambia, and Zimbabwe, right? And here the entire map is given. VBL manufacturing plant. The Pepsi logo is the indicative of the manufacturing plant that Varun Beverages has. Now, why am I focusing so much on the business? Because when you are an investor, trust me, last year I prepared an equity research report. This company is in my portfolio from 600 levels. Once again, not a recommendation, but I am telling you how I made that investment and how I am sitting over a 100% return today, right? So look at the chart. I invested somewhere around just a few back. I invested somewhere around 2020. Yeah, in Jan 2023, it was somewhere around 650 or 640. The average price is around 700 in my portfolio, and company has reached the highest level of 1423. You can look at the 52-week high is 1562, and then it corrected back. Now, why did I make that investment? I actually read the entire annual report, PPT, did some analysis on Excel, and then I arrived at the my investment thesis that Varun Beverage is a consistent compounder. So second step आपका ये होने वाला है equity research में या valuation में to get a brief understanding of the valuation, right? 32-year की strategic association है with PepsiCo, accounting for 90% of PepsiCo's beverages sales volume in 27 states and 7 union territories, right? So whenever PepsiCo sells Pepsis or any other beverages, understand this: Varun Beverages is behind 90% of its sales, right? And you can look at the sales volume CAGR, right? The blue one is your India, the red one is your international, right? From 89 million cases to 176 million cases, and 404 million cases to 737 million cases, right? This gives me a good understanding of the revenue growth. Now, इन्होंने यहाँ पे दे रखा है, right? They have given it over here. maybe there's some chance that this number is manipulated. Now, how do I make sure that this number is correct? You just look at the sales. From a odd 1800 crore levels of sale in 2012, company is making a sales of around 16,000 crores, right? So let's go to the Excel, and I have the Varun Beverages. Oh, okay. Let me just open up the Varun Beverages wali file and copy of Varun Beverages. Yep, here we go. Update. Yeah, here we are with the Varun Beverages. Yeah, it's Varun Beverages only, right? I hope you can see my screen. So let's calculate the compounded annual growth rate, right? Can anybody explain me what is compounded annual growth rate of the definition of compounded annual growth rate? Definition of Kager. Can anybody give me a good definition, folks? Please help me out.
Compounded annual growth rate of return.
How much company is growing year to year?
Wrong answer. Year to year is the wrong keyword over here, folks.
Compounded annual growth rate is that?
See, let me just explain. From this point, consider it as point one. Consider consider it as point two, right? यहाँ से लेकर के यहाँ तक, how much is the average growth rate across two time periods, right? From this time period to this time period, right? How much is the average growth rate, right? It smoothens out the growth rate, right? Because there will be fluctuation in year on year, right? Year on year growth rate can be seen over here, right? This is your year over year, right? I want to know from this point to this point, what is the average smoothened out return that is known as your compounded annual growth rate. And we have the data over here from 2012, 2014, right? So 2500 crores की sales से company आई है around, you have around 16,000 crore sales. So I want to know from a mere 2500 crore sales to 16,000 crore sales, what is the CAGR, right? Let's just calculate it. CAGR, we have a formula in Excel known as RRI. And how much is it's 1, 2, 3, 4, it's 9, right? It's your number of periods is 9. Your present value is, wait a second, present value is 2500. Your future value is your 16,000 crores. And I'll just close the bracket and I'll get the 23% is the sales CAGR. Is it good or bad, folks? Is it good or bad?
It is good.
It is very, very, very good, right? Usually, how many of you have heard about Mr. Saurabh Mukherjee? How many of you have heard about him?
Me, sir.
He's an investor.
Yeah, he's an investor. He's the founder of Marcellus PMS, right?
Yeah,
Let me just give you a Marcellus website for look, because I want to make sure that you get a deep understanding of how to conduct the research part, right? So he's the founder of Marcellus Investment, right? It's a PMS. So what they do is, even though he's underperforming right now, his criteria for investment is minimum to minimum 15% sales CAGR होना चाहिए, and year on year it should also be your 15%, minimum to minimum. Both the numbers should be more than 15%. So Varun Beverages has given a sales CAGR of 22%, and if you look at the year on year growth, it is way above your 15%, right? So this gives me a good understanding of the business, right? Now I have the financial statements of Varun Beverages. We have your profit and loss. I have your quarterly profit and loss account, your balance sheet, and your cash flow statement, and your number of shares. And now this is your forecasting wali sheet. Here we will be forecasting the financial statements of Varun Beverages, right? And as you can see, these are the last 9 years financial statements, and these are your forecasted financial statement. Now, a quick question. You might be wondering, 2024 has already been started and FY25 is about to begin. Then why am I assuming that 2024 will be a forecasting year? Why am I forecasting for 2024? Because if you look at it over here, December, right? Varun Beverages follow a calendar year wala financial year. They do not follow your conventional 1st April to 31st March, right? So we will be just control 1. Let me just customize it a bit. Right. not the actual, but your estimated. And these are your estimated numbers, and we are going to forecast the financial statements of Varun Beverages, right? So there are three ways through which you can forecast the financial statements, right? The number one is your own estimates, right? You make the judgment based on the business understanding, which is the toughest part of all, right? Then second one, you take the consensus estimate. Simply, you take the other analyst's estimate, what the other analyst and the market in general is expecting from Varun Beverages when it comes to your revenue growth, right? Third, which is the most laziest way of doing things, but most college students and new buy in valuation take the past growth rates and उसको आगे चल के चिपका देते हैं. First, take a look at the average growth rate. How to calculate the average growth rate? Simply,
Sir, you have stopped your screen sharing?
nobody, you can't see my.
No, sir.
It is
No, sir.
visible. It is visible.
It is visible, sir. It is visible.
Like, my Excel sheet wasn't visible.
It was visible.
Okay, okay, okay. Let me just. Is it visible right now, folks? Can you see
Yes,
the
yes,
sheet?
yes, sir.
Okay, so we will be
Yes.
looking at the most laziest way of forecasting the revenue, EBIT, and your PAT. सबसे for easy forecasting होती है ये equals. Come to the 2024 वाला sales. Click enter. Command C, and you have your formulas, right? And we have the revenue numbers over here. Now, simply, simply go over here and apply the formula of your year growth. Oh, sorry, growth rate formula. Your current year divided by previous year minus 1 and convert it into the percentage. Here we have the year-on-year average growth, right? So most people what they do is simply take the average of the growth rate. Average liya, and they simply took the average. The average is around 24.29%. Can anybody tell me which type of average is this? Which type of average I took? Which type of average? Is it an arithmetical average or a compounded annual growth rate?
This one is automatic.
Yeah, it's a mean. It's a simple mean, right? It's a simple mean, right? So this is the biggest problem you are going to face. Professor Aswath Damodaran, whose lectures I have attended around 100 times and read a lot of his books. So he simply says, सबसे पहली problem you are going to face is the type of average you are going to take. So let me show you another problem which you are going to face, right? Simply the RRI wali. The average 9, your present value and your future value. This is your compounded annual growth rate. Can you see the difference between the two? The difference is this minus this. A difference of 1.36% can mean a stock being overvalued and undervalued, right? So this is the biggest problem you are going to face, whether to take the simple mean, whether to take the compounded annual growth rate. Now, what most people do, most students do is say how do they forecast the statements for next 5 years? And once again, if you are wondering 5 year के लिए करनी है 10 year के लिए करनी है, whether to forecast for 10 years or 5 years or 6 or 8, the answer is forecast for 3 to 5 years, not more than that. Trust me, because जितने ये नंबर बढ़ते जाएंगे आपके उतना आपकी अनसर्टेनिटी बढ़ती जाएगी, राइट? सो इट्स फार बेटर टू नॉट टू forecast way too much. चलिए, is there any doubt till now, folks?
So what is RRI?
Your compounded annual growth rate. It's a formula to calculate the compounded annual growth rate. It's as simple as that, right? Let me just lock it. Command C, and they simply paste it, and they get the revenue, right? This is the most common way of forecasting financial statements, right? But this is a wrong way. I never recommend anybody to do that, right? To command C. All right. So now look at this number, 47,580 crores, right? This number tells me in year 2028, Varun Beverages will be doing a revenue of 47,580 crores, right? So let me ask you a question by giving you a simple situation, right? And answer it. Let's suppose. Can anybody tell me what is TAM? What is TAM in startup convention? Shark Tank India सभी देखते होंगे.
Target audience.
Total addressable market.
Yes. Total addressable market, that how much market can be addressed in a particular sector or by any particular company. Maybe, let me give you a simple example. Scenario 1. Whoops. Scenario 1. The total market for beverages, Pepsi, Cola, सब कुछ मिला दो, add every single thing. The total market may be 1 lakh crore. I am just giving you a ballpark number. This is your scenario 1, right? Scenario 2. Scenario 2 says 50,000 crore का market cap है. Sorry, TAM है, right? If I am talking about scenario 1, if the scenario 1 is true, that the entire market is 1 lakh crore ka, is this number feasible?
Yes, it is.
Yes, it is feasible. The answer is absolutely. If I am taking scenario 2, if this is true, is this number feasible?
Might not be.
It might not be. There is a high probability that you will go wrong, right? Because if I'm talking about the entire beverages market, there are certain other players as well, right? Even though there is no direct competition for Varun beverages, but Coca-Cola exists, right? Coca-Cola is also there, even though they are not franchisee based, but Pepsi's direct competitor is Coca-Cola, and we know. So make sure that whenever you forecast any profit and loss account, the last year number should be within your TAM, right? Is there any doubt, folks? Is there any doubt till now?
No, sir.
Yeah. So make
How
sure that
this data can be obtained for TAM?
Yeah, sure. Simply click on export to Excel wala part. The entire Excel sheet will be downloaded, right?
No, the data for TAM, total addressable market.
Oh,
How we can get this data?
Sure. You just simply do an industry analysis. Let me just give you a wires and cables industry report, right?
Yeah.
You can get any report, right? Let me just give you a real life example. I don't remember the Havells India. If I remember it correctly, I read a report on Havells company about the. Wait a second. Let me just go over here. And I read a report on cables company. I don't remember which company was RR Kabel. Yes, it. And they gave a total market about wires and industry, right? So if you're talking about how to get the industry level data sectoral report, then the answer is your, most of the time, the answer is your annual report.
Okay,
because in annual report, they give you all the data about Indian economy, about how the market is performing in the MD&A section, right? Let me just show you. Because I want it to be as practical as possible. Chota ho, lekin practical ho yaar. Where the hell is MD&A? Here it is. Management discussion analysis, right? Key growth drivers and opportunities.
Yes. In annual reports, it is generally there.
Yeah. So you will get the data. So let me just, industry research is over there. They gave a wonderful industry report. So I want to show you how you can gather the data. The data will not be given to you on a platter, but you need to search the data. Industry research. Look. Yeah. I read this report, entirely report. Wires and cables market in India, 20, page number 20. So let me just show you what's the total addressable market. Page number 20. Okay. It gave me a brief understanding of the wires and cables, and this is how you can get the data. All right. Look, it is over there. Till fiscal 2027, currently the market is around it has grown at a CAGR of approximately 11% from 33,000 crore in 2015 to 74,000 crore in 2023. Now, till FY27, it is all set to grow at a value to 1,20,000 crores, right? So this gives you data. This gives you an understanding of the TAM, right? Because TAM is also an estimate. It's not a like patthar ki lakeer nahi hai. It's not a patthar ki lakeer that it's an exact number, but it will give you a brief understanding ki how much feasible your forecasting is, right?
Yeah.
Okay, what are the factors we have to see in the report?
Which report? Annual report?
Yeah, the report you are showing, the analysis report you are showing right now, this analysis chart here. So what apart from that the amount, okay, the growth revenue you're shown. So what other factors we have to see? I mean, any see like in the debt ratio of the customer or client or anything like maybe.
See,
What are the
sir,
things we should check actually?
there are a lot of things that you need to check. There is a course on my YouTube channel. If you go over there, I have taught the entire equity research. There is a ton of research that you need to do, right? When I talk about the first step is to go through the con calls, right? Then go for the credit rating reports, then go for the annual report. These are three things that you absolutely must do. And even in annual report, you need to be really, really smart what to ignore and what to look for, right? Because there are certain things which are absolutely
Okay.
bullshit in annual reports, right? And then comes your ratio
Yeah, that's
analysis.
what.
Yeah, this
Correct,
ratio
correct.
analysis. Every single ratio over here is quite important, but there are certain ratios which are more important than the other. The first one is your ROC, 28%. It shows me how much return the company is generating on the capital employed by its stakeholders, right? And then the interest coverage ratio, because if you look at the balance sheet of the Varun Beverages, it is a highly leveraged balance sheet. It has always been like this, right? Now, if you look at the balance sheet of the Varun Beverages, you will realize the strategy of the company is not to rely too much on the equity capital for the growth, right? They are relying mostly on the your borrowings part, borrowing ले लेके business grow करना है, right? And if you look at other aspect of the balance sheet, fixed asset should be growing year on year, right? This is one more aspect that I look. And capital work in progress should also be increasing year after year. It means that the company is in the growth mode, right? So these are the few things that I always look at. And operating margins should be stable and should be expanding, right? Now, if you look at from the December 2022, oh, this is quarterly, right? If you look at from December 2020, from 19% to 23%, the margins expanded like crazy, right? 400 basis points, that is 4%. And then the stock blasted, right? So this gives me a good understanding that margin expansion is super crucial. So these are the few things that you need to look at. The entire ratio analysis, common size analysis, vertical analysis cannot be done in this session. So let's just focus on the forecasting part. So always remember, folks, last year ka data should be, last year ki forecasting should be within your TAM. I hope I have cleared it out, sir.
Oh yeah, sure.
Yeah.
Thank you.
So if this number is way too bigger, then it means I have made some mistakes. Now let's look at the EBIT. Now how do we calculate the EBIT? I hope EBIT आप सभी को पता हो, it's operating profit, right? It's operating profit. अगर मैं हिंदी में बोलूँ तो it's कामकाजी मुनाफा, सारे कामकाजी खर्चे निकाल के जो profit बनता है, that is your EBIT, earnings before interest and tax. Now some people they take EBITDA, which is earnings before interest, tax, depreciation and amortization, right? So EBITDA माने वो भी कामकाजी मुनाफा होता है, but it's a proxy for operating cash flow. But here I am taking EBIT because it will going to make my things easier in the discounted cash flow valuation model, right? So let me just bring EBIT over here from the previous sheet. Equals your EBIT. EBIT is over here. Enter Command C and formulas, right? Here the growth is given. Growth in percentage is 88%. The growth is phenomenal. In only 2 years did the company has a down year, in year 2020 and in year 2017. So folks, can you just see this column? Revenue got
COVID
down.
year.
Yeah, COVID year, right? Revenue degrew around 9.53%, and EBIT degrew to 35.7%. Can anybody tell me the name of this phenomena? Percentage change in sale divided by percentage change in EBIT. Can anybody tell me what this phenomena is? There is a magnifying effect, right? This phenomena is known as your operating leverage, right? It's a double-edged sword, but I'll not be talking about it much here. But operating leverage is something that everybody needs to understand because it is a wonderful concept. Margin simply your EBIT divided by your revenue, Command C, and your right, Control C. And once again, this is exactly what we are going to do. I have calculated the average margins over here, right? So I'll simply paste the average margins equals, once again I have F2 And yeah, I have taken the average margins over here. This multiplied by your EBIT, command V, and we get the EBIT part. This is one of the most laziest way of doing things, but anyway. And let's look at the PAT. I have the PAT over here as well. I hope you know how to bring the PAT. पिछली सीट से लाए हैं हम ये. And look at the PAT margins over the years. From a loss-making company to a profit-making company with an average margin of 12.82%. Right? Now let's calculate the average PAT margins. Equals average equals right 5.83%. Right? Now here is the biggest problem. Right? The PAT margin is not so reliable in this case because the company gone through a period of making losses to barely breaking even to a period of phenomenal profits, right? Now, this is the biggest problem when we take the average, right? The divergence in the like what do we call it? Individual individual numbers will cause average to give a distorted value, right? Because the higher the distortion in the data set, the useless the averages. But anyways, let's calculate it. Equals your profit, your sales multiplied by your margins gives me a profit of 1100 crores in next year. So this is the exact problem. I am saying to my investor that 2000 crore ke profit say last year, company will come at a profit of 1100 crores with a degrowth of 43%, and the margins will collapse to 12% from 12% to 5.83%. Even though we forecasted the financial statements for next 5 years, this number is not so reliable. So, did we see the problem with the averages, folks? The biggest problem with the averages? And are we good over here, right? Average को करके कैसे हम calculate करते हैं? So I'm just making sure we do not have any links. Yep, good. Now, this was your average way. Any doubt till now, folks? Do we have any doubt or are we good? Please let me know, folks, because we are going to now look at.
No doubt.
Yeah.
Like the entry and exit point, you will going to explain like when to enter.
Like
when to
at
buy.
what price to enter?
Yeah,
Right?
yeah. What price to buy and what? How much time period to hold it?
See, at what price to buy is highly subjective, and how long to hold it is very subjective, right? How do we calculate the price at which to buy depends on several factors. It depends on the growth rate of the company. It depends on the market sentiment, right? And it also depends on the valuation, the PE of the company. Currently, Varun Beverage is trading at a PE of 87 times, right? Which means that I am willing to give 87 rupees for one single rupee of Varun Beverages, right? So there are certain valuation methodologies through which you can come at a buying price. DCF is one of them, but we will not be touching DCF today because DCF करने में तो time लग जाएगा, right? So according to my assumption, जो last DCF मैंने किया था, it gave me an intrinsic value of 1600 rupees. Once again, not a recommendation. So DCF is one of the ways. अगर आप प्रोफेसर दामोदर के हार्डकोर फैन हो,
DCF.
क्या? Sorry.
DCF. What is DCF?
Once again वही बात है कि मतलब लंबा सेशन हो जाएगा. Discounted cash flow valuation methodology होती है ये. It tells me what is the future cash flows of the company, and then I use a discounting equation to bring them back to the present. And it tells me, according to the future growth rate of the company, according to the business fundamentals of the company, what is the value, right? DCF in itself is a 100-hour course, right? अगर आपको एक्चुअल में DCF समझना है, right? प्रोफेसर दामोदरन की उस पे जाओगे आप उस पे YouTube चैनल पे, then there will be an entire course, and even on my YouTube channel you will see a DCF valuation course, right? So once again, discounted cash flow is one of them. Another way to calculate the entry exit point, right? Here we have calculated the EPS, right? Let me give you a live example, right? ये bull case है मेरा, हाँ. Second is my bull case, right? Current market price is your current market price. How much is the market price right now? 1424, 1424. PE. How much is the PE right now? 87 times, right? And how much is the? And here is the forecasted EPS, right? This is my forecasted EPS, right? Now, can anybody tell me what is the formula for your price to earnings ratio? PE formula, price to earnings.
For share price divided by earnings per share.
Yeah, price divided by your EPS, right? So, can we calculate the forward PE? We have the price, we have the forward EPS. Can we calculate the forward PE? Equals market price. Market price is 1424. Let me just lock it. F4, right? Divided by your EPS. Wait, maybe just a second. Oh, it's EPS. Wait, there is some problem. What's the EPS over here? 15, right? That. Wait a second. How come the EPS is coming wrong? 2055 net profit. Just a second. Anyways. Just a second. Let me see what we have done over here. F2 C96. Oh, number of shares is wrong over here. We have shares of around 129. That's why the answer is wrong. Right? Equals number of shares 129. That's why I see why the. Yeah, we have the forward EPS. We have the bull case across. Right? Let's calculate the forward P equals your share price. Let me just lock it. F4 divided by your command C, command B, right? Command 1, number, right? So this gives me the forward P, right? We have the forward P. Let's calculate the valuation, right? Equals. So can anybody tell me if price is equal to PE is equal to price divided by EPS, then what is the formula for price? Basic algebra. PE multiplied by your EPS. Is that correct, folks? PE multiplied by EPS? Yes. So can we have the forward PE. We have the forward PE, right? We have the EPS. Can we calculate the price? Wait, maybe there is some mistake, right? Like, is there any question or because, right? Forward PE we have this multiplied by your current EPS. Let's see what we get. Oops, the answer is coming wrong. Maybe we are making some mistake, right? Anyways, let's move forward, right? So, based on forward P, we can decide the entry and exit price, right? So, according to my estimates, right? अभी ये कैसे करते हैं? We'll come to it. Switches कैसे बनाते हैं? If I'm making the assumption that my bull case assumption will be true, right? The forward PE of the stock is coming around 73 times, which is way less than the 87 times, right? So, based on my estimates, I can give a buy or sell rating based on that. Even though this, I couldn't give the entire calculation, right? But this is how you calculate the entry price. And when we talk about the exit, let me give you a brief, simple way of deciding whether to hold or to sell, right? अगर business अच्छा perform कर रहा है, if the business is performing really really well, then keep holding, right? When to sell? If the PE is way too high, right? Let me give you a simple example. Vari Renewables, right? I have the stock with me from a price of around 600, 300 or something. Yeah, 300 or something. And I made a 600% return on it, right? Currently, the PE is 184, right? So this gives me an indication whether to sell or buy, right? Even though I'm still holding, but I'll still see how much Vari can go up in the price, because the profit and loss is phenomenal, right? You just look at the uptrend, right? Just look at the uptrend. So I hope things are a bit clear. Quickly, let's look at the consensus estimate, and then we can look forward to the. So when we talk about consensus, can anybody tell me what is the meaning of consensus?
The common agreement.
Yeah, common agreement. What the market says, right? Because I want to know what exactly the market is expecting from Varun Beverages when I'm talking about their revenue growth, right? Now here you can see 14 March 2024 की report है, and Motilal Oswal is consistently covering the report, covering the company, and they are telling me that the target price is 1600 rupees. Now let's see how did they arrive with the target price. Full year report, right? Let me show you another ticker terminal. You can take your consensus estimate from here as well. Ticker terminal is a global equity research website, right? It is a paid tool. I pay somewhere around $25 a month. I'll simply type Varun Beverages. Oops. So management guidance isn't there. So I have the next 3 year forecast, right? 24, 25, and 26, right? What they are assuming is Varun Beverages is going to give a 23%, 18%, 23%, 18%, and 15% growth over the next 3 years, right? Now let's look at this. Sales, they are estimating 2024 sale to be 200 billion rupees. That is around 2,000 crores. No, it's 20,000 crores, right? 20,000 crores. Let's go to the Varun. And 24,000 crores in 25. So a solid 20% growth rate, right? So in consensus estimates, this is what I do. I simply take the average of the consensus, 21%. I'll paste it across here. This is hard coded numbers, 21, 18, 50, and I'll simply equals this multiplied by 1 plus your this. Command C, paste across formulas. This gives me a good understanding. Now this number is your hard coded, and that is why it is blue, right? EBIT, let's look at the EBIT margin, how much margins they are expecting. EBITDA margin is somewhere around 22 and 23%, but to be on the conservative side, right? And what about them? EBIT margins, they are also on the conservative side, 18 to 19%. So let's take the 20% as your EBIT margin, link it across, right? And calculate the EBIT equals your this multiplied by your this, command C, command V. Command 1, wait. paste across formulas. Oh, chalo, koi nahi. Anyways, and this is how you calculate the. Now let's look at the profit after tax, net profit. Simply, I'll take the growth. How much profit margin they are? 12%, 13%, and 14.3%. So I'll just 13, 13, 14, and 14. To be on the conservative side, let's keep it as stable as possible. Equals sales multiplied by your margins. Formulas, and we get the right. Now you might be wondering, मैंने इतना जल्दी जल्दी कर दिया, but actually the entire process is quite cumbersome. You have to read this entire report, right? It's somewhere around 10 pages, right? You need to read the entire 10 pages to understand how the company is being analyzed by the analysts at Motilal Oswal, right? I hope the this consensus estimates wala part is clear, right? They have given their entire philosophy in this part. Now let's look at the revenue forecasting by building out the scenarios, right? So let's quickly build out the scenarios. How do we build the scenarios, right? Is there any doubt till now, folks? Is there any doubt, or are we good, folks?
Yeah, you may proceed, please.
All right, sir. Thank you. So before
One
we,
question, sorry to interrupt.
sorry,
Yeah, I want to know the website which you say you subscribe for $25 per month.
yeah, it's Ticker Terminal, TIKR Terminal. You can get all the data around the world, all
Okay,
the
okay.
companies, all the. You have Apple Link as well. So it gives you data of 2,200 plus website, and you can apply global screener as well. You can see the entire global market overview as well. So
So
all
the
the,
screener,
sorry,
so the screener we cannot do only by using screener.
for in screener you have only Indian companies. In Ticker Terminal you have global companies, right? Because I track the entire global market, and I track US market as well. So that is the reason I'm using this. So you have your entire global market news feed as well. So this is the website. If you want to, you can purchase the subscription, $25 a month. Chalo. Now let's build out the scenarios. In base case, I am assuming that each year, from a base of 21%, which is my consensus estimate, right? Let me just show you what I have done. Consensus estimate base, lock it, right? And same goes for my bull, bear, and base case scenario. Now, I am going to build my entire scenario for the next 4 years on next year's revenue, right? So, base case, what I'm assuming, each year revenue will grow 2%. In EBITDA margins will go down by 0.25%, and PAT will go up by 0.25%. In bull case scenario, I'm assuming revenue will grow based on my estimates 5% each year, over and above the consensus estimate. EBIT and PAT margins will go up by 1.5%. And in the bear case, revenue will go down 3% each year, over and above the consensus estimate. EBIT and PAT will go down by 1.5 and 1% respectively. How did I come upon that? It is by understanding the business of Varun Beverages upon my own research. And to do the thorough research, you need to go through all the documents of Varun Beverages, read the company transcript, Concord transcript, go to the PPT section, annual report, and all, and even read the other company's research report as well. So let's quickly build the scenarios, right?
Your screen seems to be frozen.
Screen seems to be what, sir?
It
Frozen,
is frozen on the Excel. It is not moving actually.
The screen is not moving.
Frozen, not getting displayed.
Okay, I don't know what's the issue. Maybe I'll just stop presenting and presenting again.
You can start presenting again.
Yes.
I don't know what's the issue because my internet connection is quite fast and quite stable. And can you see the screen now?
Yeah, now it is visible. Yeah.
Okay, so this is what I did. I'll simply wait. Right, I'll just build the scenario. First, look at the revenue equals 21% plus your revenue step. I'll lock it. F4, Control C, formulas. Right. So in my base case, I am assuming that each year revenue will grow up by 2% each year, 21, 23, 25, 27, and 29. Right. My base is my consensus estimate. In the my bull case scenario equals this plus your bull case wala scenario is 5%. I'll fix it. Enter Command C and Command V. Right. Paste across formulas. Right. So this is a quite bullish revenue growth. And in this area, I'll simply take this plus my bear case scenario, which is -3 each successive year. Command C, formulas, right? So this gives me a brief understanding, right? Now I want to make sure that I have switches. I want to make sure that my model is as dynamic as possible. So I've applied a formula known as offset. Let's apply it. Equals offset reference this, which row, this one. I'll fix it. F4 comma 0. Command C and your paste formula. And once I do change it one, it gives me this. Row number 2, bullish scenario, it gives me this. So this is how I can change across my revenue growth and EBIT margin. And same I'll do with the EBIT as well. My base is my consensus estimate, and I'm going to base my scenarios on my switches. Equals this plus your EBIT step, lock it, enter, Command C, formulas, enter. This equals this plus my bullish scenario, F4, Command C, oops, formulas. I get my margins. Equal this plus my bearish scenario, fix it, enter, Command C, your Command V, formulas. Right? So this gives me a good understanding how the margins are going to behave if I have done a good research. Let's quickly take a look at your profit after tax now. Same thing, equal this plus your pad step, F4, Command C, your Command V, formulas, right? Equal this plus your bullish scenario. My bullish scenario tells me margins will expand to 1.5%. Command C, formulas equal this plus, and my bearish scenarios tell me each year revenue will go down to by 1.5% each year. Formulas, and we have your revenue forecasted and your PAT as well. Now, to understand it in depth, I would suggest you all to go through my course on YouTube because I have quickly done it, but there is a lot of research behind these numbers. So, once you change your assumptions over here, and as you can see, I have colored them as blue because these are hard coded numbers. This is also hard coded, and once you change any assumption over here, you will get a different answer below, right? So, folks, this is it. This was it with the forecasting part. I hope the session was useful to you, and I know there can be a n number of doubts, and I'm ready to clear them now. We can move for the Q&A session if you want.
Yeah, yeah. So, guys, if you have any question, please raise your hands first. Then we'll take the questions. Yeah, Samarth.
Yeah, I just wanted to know how do you determine the final target price? Like, if there is a valuation, let's say a share is being traded at 2x the book value, how do you get the final target price?
See, usually target price, if you are doing a cost of, no, sorry, discounted cash flow valuation, the intrinsic valuation will tell you what's the target price. Over here, intrinsic value, according to my assumption, if I make bullish assumption over here, right? It depends on your assumption, right? Number two is your bull case, right? I am over here in bull case. And when I'm in bull case, the intrinsic value comes around at 1600 rupees. So 1600 becomes my target price, right? So this is how most of the analysts do. Because in on Dalal Street, we typically do a complex DCF. And if here I have done a easy DCF model. So this is how you determine your target price based on your assumptions. It all matters on your assumptions. If you are assuming that the company is going to grow at a faster rate than the counterparts, then the target price can be anything, right? And nobody knows for sure what the target price is going to be, right?
All right. Thank you.
Yep.
Yeah, Chinmay, go ahead.
So has you any specification on index, like investing on index rather than particular stocks?
Like index funds.
Yeah, active
Like
or
my view on index funds, right?
yeah.
Yeah, index funds are good. Index funds are good, but they're quite boring, right? If you are someone who says I don't want to actually analyze businesses and I'm uh, okay with becoming rich in my 60s or 70s, then index funds are for you. Index funds gives you a return closer to index, but the risk in index fund is there may be some tracking errors, right? Usually tracking errors are there that the index fund, index company is not able to track the fund, track the index as closely as possible. So that becomes a crucial point to be kept in mind. And secondly, they are boring, right? So this is my honest opinion on that. Because index through index fund you are not going to become rich at 40, 50, right? And it all depends on your starting capital as well, right? Because you are going to do an SIP each one. So please keep a step up SIP if you want to make huge sums of wealth, because without SIP you are not going to become index funds.
And on trading, sir.
Trading, trading, when it comes to trading, it all depends on your risk management policies, right? If you are reckless in risk management, then trust me, trading will not make you rich. And if you have a good starting point, starting capital that is, and you are good at managing risk and your strategy is sound, then you can trade, right? It all depends on managing the risk, because you cannot manage the return, you cannot manage the news, you cannot manage the events happening outside India or in India, right? You can only manage your risk. So it all depends on that. Right.
Okay. Anant, please go ahead.
Yeah, actually, if you have calculated some fair value for particular stock and actually value is less than what is there in the market, so how to avoid this FOMO factor, this fear of missing out, because others are actually trading in that particular stock, but you are not trading.
Okay, so this is one of the most common question I get, and I'm guilty of making this mistake as well. That trusting
Yeah.
Excel sheet is a hazardous exercise, right? Because Excel sheet may, if I am assuming over here, right, this, look at this sheet, right, this row, reinvestment rate. I am assuming that Varun Beverages will reinvest 10% of its profit back into the business, right? If I make this assumption as 50%, right, entire value changes and the value comes around 882 rupees, right? But when the stock was at 882 rupees, it went up and it is still going up and up every single day, right? So please, for that you need to understand the business. Research, keep your research really well and take a leap of faith, right? I what i usually do is I make sure that when I invest in any stock, the PE should be less than the industry average, right? And there should be high profit growth, right? I'll show you a company. I'm currently analyzing this company. PE is at around 30, right? Median PE comes at around 38 or 40, right? If you look at the big player, their PE comes somewhere around 40 to 50 or 70, right? And look at the profit growth. Look at this: 54, 61, 70, 88, and 110. So this becomes crucial to how to avoid the FOMO is to do not depend too much on Excel sheets. If you are investing, right, do not depend too much on them, right? Make sure that the margins are expanding, profit growth is there, sales growth is there, and the PE is low. Then take a leap of faith and invest some capital, right? Don't invest all of your capital at once. Make it step by step, right? So this is how you avoid the FOMO. And do not trust this Excel sheet, right? कुछ भी कर सकते हैं यहाँ पे बैठ के आप.
So, are there any thumb rules for long-term investment?
Yeah, there is a thumb rule. Revenue growth should be there, right?
Yeah.
Business should be scalable business, right? Profit growth should be there. Management should be honest, right? Management should be honest, right? So these are the few things.
And what about the total capital? Suppose total capital of 100. So out of that, how much I can invest in
See,
one particular
if you are a
stock?
retail investor and you are an absolute new, please invest 5% of your capital in 20 stocks. Keep it well diversified to test the waters, right? Do not test the depth of the river with both of your legs, right?
Yeah.
Right? So keep it diversified. Consider your some of your capital as your learning capital, right? Because learning occurs only when we actually do the stuff and not when we are reading books.
Yeah. Thank you very much.
Yeah, pleasure.
Also, sir, we had collected few questions before the session. I
Sir,
just want.
just
Okay, sure. Go ahead.
like how to make a career in
Equity
investing,
research, right?
like equity research and fund managing.
Yeah, get a CFA or an MBA from a top college, right? Get a CFA and MBA from a top college. That is the first step, and get the right internship while you are pursuing the courses, right? So we also offer internships. Many of our interns are from top MBA schools, and for further knowing the entire industry, I would suggest all of you to go through my course on the equity research, right? Because it will give you a brief understanding how to make a career and how to find a job on LinkedIn, right? This course is available for free on my YouTube channel, right? Yes, economics degree can be helpful, but you need to be specialized in some financial analysis part. So CA, CFA, FRM, MBA in finance can help you.
Sir, not like we are on only database science. It cannot be done
It
only
can be
with this
data.
degree.
See, data science is a wonderful degree, and secondly, you are from IIT, right? You have the brand name of IIT, right? So going forward, data science, your machine learning, your big data is going to play a crucial role in the investment management industry. And most of the firms that are in the investment industry, if they are not utilizing the data, right, then they will fall behind. So data science is a great starting point, but you need to have a finance degree as well, because most of the fund management part, you need some finance knowledge as well, right?
Okay. Sir, there was also a question that how to identify which equity to purchase.
See, once again, it is a part of the screening process. I would suggest you to know that answer. You should look at my course, because if you go to the screener part, there is a tool called screen, and you can create new screen as well, right? So this will give you a how to identify a good company, right? Here, alpha screens are there. Most of the company in this turned out to be multi-bagger. I created this screen back in 2021. This is my entire screen, this entire criteria, right? So these are the companies that you should look at, right? Once again, not a recommendation, but you can study these companies and make your decisions.
Okay.
Yeah,
There was a question that what's better, small consecutive profit or one big profit?
it depends on your strategy. It depends on your strategy. If you are a trader, and if you are a day trader, then small profit booking seems reasonable. And if you are a long-term investor, then making multi-bagger returns should be your goal.
Also, sir, students have requested to share the roadmap to start learning about to start their own research? How can they start?
See, the first step is to go through my course, right? Once again, why am I saying to go through my course? Because it is one of the best course you will find on the internet for free. It is quite famous on LinkedIn as well. And if you are a part of my group, then you will see I share a lot of content. So the first step is to get the basic understanding of the equity research, right? Then go for the valuation part, right? So this is the first few steps that you need to take. Because if you do not know how to do the equity research, how can you do the valuation, right? It's common.
Yeah, good.
Yeah.
Uh, Guys, if you have any questions still left, please go ahead.
Are there any questions, folks? How to join your group? I'll share the link. Wait. I'll just share the link right now. Do you want me to share the link?
Yes, sir, please.
Okay, I'll just share my link, business valuation, and in the chat box. Just a second, folks. Just give me 1 minute. Like, where do I paste this? Yeah, here it is. Yup, here is the group link. This is the newest group link. Yup. So, Rishabh, yes, economics degree from abroad would be a good option for your interest, right? And you have CSE, I guess it's computer science, right? So, yeah, it's a good sign. You will get a good brand name as well, and you already have the brand name of IIT. So, go for it. And economics does help. Mr. Saurav Mukherjee has also an economics degree. So, yeah, it's good. Any other question, folks? You can join the group right now. It's free for everyone, and I share a lot of content.
Okay.
Hello.
Okay, go ahead. Hello.
Sir, my question is that before starting this, what are the basic needs which I have? Yeah, not.
See, the basic needs is to have love for reading, right? You need to, because at the end of the day, equity research, investment banking, your valuation are quite boring career options, right? They are quite boring. Trust me when I say this. If you go into some big investment bank, big M&A team, you will spend your entire day on an Excel sheet, Microsoft PowerPoint, and your MS Word, right? So, equity research start करने से पहले, to before you start equity research, make sure you love how to read the financial statements, your annual report, and all of this stuff. Yeah, it is quite lucrative, but most people are doing just for showing it off to others.
And one question also, sir.
Mm-hmm.
Sir, basically, I don't know how to invest money in any field. Then, what is the best way according to you? In after 10 years, I have some money.
Okay,
Where
so
I invest the money?
you should start with the mutual funds. Start with some mutual funds because it will give you a practical stuff. I would say practical experience to practical exposure to markets. Right? You will understand how the markets work, how the fluctuations happen in the market. So it will help you from that. Don't go with the individual stocks right now. Go slow. Go with the mutual funds and act accordingly.
Okay, sir. Thank
Yep.
you, sir.
Pleasure.
Okay, so if you have no other questions, we'll end the session. So this was a very insightful session, very wonderful session. Thank you so much for your time and valuable insights. And uh, it is not the end of the day. We need to go through all the resources in your YouTube channel and
Madam,
every. Yeah.
ma'am, I unable to join.
Actually, actually, the session ended almost. It's okay. You can
Can you
run
mail
the
this
recording.
WhatsApp link?
Yeah, sure. It will be there in the group. Okay. Okay, sir. Thank you so much for the session. We
Yeah.
are
Thank you,
winding.
guys.
Okay.
Thank you, sir. Thank you so much, everyone, for having me. And I hope you actually learned something. And if you want, I can share the Excel sheet with you. Right. So once again, because you are not going to learn by just by looking at me or some other person. So folks, bye bye and take care and kindly join the group. And I hope you will attend my equity research classes as well. Thank you so much,
Okay,
folks.
sir.
Have a good night.
Yeah, yes, sir.
Thank you, sir.
Thank you, guys.
Thank you,
Thank you
sir.
so much. It was an honor to serve you guys.
WhatsApp नहीं खोलते